Okay, folks, this is a short video for those who missed the sharing on the DAX index yesterday and how we can use it on the trader bots. So DAX is just basically the 40 largest German blue chip companies, so it's a strong index. If we look at the chart on top versus the chart below, this is Nasdaq on top and this is DAX below. Looks similar, so expect that we could use almost similar settings. One caveat to take note is that try to use Blueberry for DAX because of the timing. Blueberry has the widest time range open compared to Pepperstone and FX Pro. All right, some backtesting results, 2 years versus 1 year. Simply put, for the whole of 2024, it's been performing well. You can see all these different combinations of trade gap from 80 to 220, 100 to 250, 150 to 300, and this is running plain vanilla. This column here is running with some unhedging using the version 7 beta bots. And while you can see some anomalies towards the end here, well, these anomalies are easily averted because of the end date. We just shift the end dates by a few days, 10 days, and you see that actually the performance is okay. So the caveat here is just don't read backtest values at face value. Take a look at it, think through, and see whether it makes sense that it should be profitable or not. Okay, backtrack a bit. Question that people may ask if they're not familiar with this chart is that blue line represents the balance and green line represents the equity. So the gap between the balance and equity, well, that's your floating loss. Okay, if we shift this to a 2-year time frame, then you see that most of this combination testing, and we do combination testing because most of us are running, a 10K, 20K, 5K account with a few trade sets running, right? So it's quite relevant to a real life environment. You can see that, well, most of them, almost all of them didn't survive. Maybe this one would have survived if we stretch the time frame a bit. So therefore, just have this idea in mind, this thought in mind that, not everything is rosy. Some years the charts are not so favorable and then the bots don't perform so well. So as with all things, using the trader bots, enter, looking at the charts so that you are clear that the chart is trending. And of course, if the chart does go sideways, doesn't matter what settings you have, you could be taken out. All right, so I ran a back test for 2025 and it was fantastic results starting from 1st January. A 10K account became almost 18K. All right, however, what if we instead started not during the 1st of January, but I chose a date whereby there was ranging, right? So how does it look during ranging and what can happen, right? So I move back in time frame, in January everything looks great, but you move back a bit, you see that there's a ranging period. So I started somewhere here, 20th December, and then you can see straight out, without any unhedging features turned on, you get liquidated. Of course, with unhedging features turned on, in these 3 charts, you can see that, it managed to live through this period and actually thrive. So this is the version 6 bots that we're using. And these are the version 7 bots with different settings of levels, buffer, and stop loss. All right. And yep, and this is just the chart I showed in the previous slide, showing that if you start 1st January, everything is sunny and rosy. And if we ran this on the Eagle bot, yep, did well. Did equally well, right? And then these are some sharings that I had, which you can watch the fuller videos to go through. And these are all just smaller trade gaps, not recommended, but just to figure out what went wrong. What went wrong when we ran from the sideways period is simply that trade gap 80 caused a lot of problems. You can see I've done a whole bunch of tests here, right? Whereas the other trade gaps, 100, 200, 250, 290, all okay. And so the theory was that if 80 was not okay, what if I ran a smaller trade gap that would force a breakout? And these results confirm that a smaller trade gap outside of 80 was great. So what you can conclude is that 80 just didn't give you the kind of results you wanted during the ranging period, and it was the trouble trade gap, right? So that's all it confirms. Not encouraging anyone to use trade gaps smaller than 80. Um, so let's quickly talk about the dangers of DAX, right? It has the same challenge as NASDAQ. You can also see gap downs like this. You can see sharp spikes like this. All right. So, and this happened in 2023, but this one happened in 2025, right? So therefore, as with all charts, you just need to watch it, tread carefully. There can still be dangers, right? So possible settings is about 150 to 300. I think that would be a good place to start. And of course, you guys can go and do your own back test to experiment. You can run with either unhedging turned off or turned on. Turned on, you can do from levels 4 to 8, buffer 0 to 20, and stop loss -1 to +2. All right, and don't forget that you should avoid brokers that don't open for the full duration of the DAX trading. All right, that's it. Trade safe, everyone.